Supply and demand is one of the most easiest trading strategy out there to understand, and it's actually my favorite strategy, and I've been trading it for a long time. Like basically the OGs on this channel knows that what supply and demand has been my baby, and that is what I've been trading for years. Use it to pass prop firm, use it to withdraw from prop firms, and then I personally use it to trade live account and also made withdrawals from my live account as well. But the truth is that a lot of you who get into supply and demand keep finding yourself in this sort of loopholes whereby you identify a level and then the next minute the market is breaking the level, even without showing any atom of respect to at least respect the stress you put in identifying a wrong level. So if you're a supply and demand trader out there who haven't been getting a decent result, then you need to watch this video to the very end. So guys, before we proceed, let's give a big shout out to our today's sponsor, lightfinance.org. Light Finance is one of the best trading platforms out there, boasting over 4.3 rating on Trustpilot, which means that they are highly positive and users have positive view of them. And they offer one of the best and easiest trading platforms out there as well. So basically, when you come over here, you have access to MetaTrader 4 and 5, CTrader, so forth and so on. And they offer some of the best spread, which is as little as 0.0 spread for some trading pairs. And also has the fastest execution when it comes to trading. On top of that, they offer over 600 trading pairs ranging from forex, stock, commodities, cryptos, and so forth and so on. And to top it all up, it's even advisable for non-good traders to actually use, as they offer copy trading, which is a way for you to actually make profit without having to know how to trade. All you basically have to do is simply copy already profitable trade on their platform from other profitable traders, and you can basically be making profit on autopilot. And guess what? The minimum deposit on Light Finance is just $10. Anyone at all can actually try that. But if you are not interested in trading a live account and you want to start with a prop firm as well, there's no problem. You can sign up for Blueberry Funded. The link will be down in the video description. So guys, with this already said, let's get straight to today's tutorial. So now, when it comes to trading supply and demand the right way and making sure that you are getting a decent result from the effort you are putting into analyzing the market and every other thing, the first thing you need to make sure is simply so guys, the first tip here in actually making sure that you are trading supply and demand the right way is simply following the market direction. Like for example, let's take a look at Euro USD. Now here's Euro USD on the daily time frame, and we all can see on the daily time frame that the market is in an uptrend. We all can see clearly that we had a market shift from this point. We had a market shift from this point right here. Now market shift is also known as break of structure, so make sure you have that in mind. And then followed by a break of structure here to the upside as well. We had a break of structure here, and then followed by another mini break of structure right here. Now you can see we also have another break of structure at the very top. Now this shows that the market is in an uptrend. Now with this idea, we know that the market is an uptrend. Now when it comes to trading supply and demand, you don't just wake up and identify random levels. You follow the right principle. And the first one is simply identifying the market trend on a higher time frame. Now if you are someone who is trading the 15-minute time frame, you could focus more on the 4-hour, 1 hour, 30 minutes as your higher time frame, and then use the 15-minute for the rest. Now I am someone who wants to focus more on trading the 4-hour time frame, and in order to do that, I go to the daily time frame to actually see the overall trend. Now after I get this, then we'll move on to the next step. Now after knowing the market direction, the next thing is simply identifying the right levels in the market. Now when it comes to trading supply and demand, here's one thing a lot of you don't know. Not every level in the market will actually work. Like basically the market prints a lot of supply or demand levels whilst it's making its move, but the truth is that not all of them will actually work. There are criteria that actually mark out levels that actually works. Now let me show you a typical example right here. Now first of all, let me go back to a particular trade I used as an example during the intro. I've actually forgotten where I made that mark. I think that was USD-JPY. Okay, that was USD-JPY. Now let me show you something right here in this market. I guess this was where was the level I even marked here? Okay, this was it, I guess, where the market actually broke it without any atom of respect. Now some of you will come and then mark these sort of levels and expect the market to actually hold when they come here. First of all, ask yourself, what exactly do you think will make this level hold in the first place? Like there's no clear reason why you should mark this level. Now this takes you back to what level exactly should you mark when it comes to trading supply and demand. Now let me show you the kind of levels you look at for in the market. Now let me come back to Euro USD. Now when you take a look at Euro USD right now, Euro USD, you can see the levels we marked here. You can see we had a break of, okay, market shift back, break of structure, break of structure, break of structure. Now once you have all of this break of structure, the next thing you look for in the market before you identify any level is simply you look for where there's a high momentum move. What I mean by high momentum is simply this either a demand level or a supply level where the market made a very heavy movement from. Like for example, since this market is in an uptrend, we are only interested in buying. So for that, let's look at clear demand levels, because we all know that we buy from demand levels and then sell from supply levels. So for that reason, we look for a clear demand level right here. Now looking at this market here, we can see that what? Here we had a break of structure, as you can see. This is where we had a break of structure. So let me just close this off. So right here we had a break of structure. Now if you look behind this break of structure, we can see that well, there was clearly a high move from this level. You can see there was a very clean move from here to this upside. Now this shows that well, there's a high momentum move here, and that simply means that we can actually be looking for buying opportunities from this level. Why? Because when it comes to trading supply and demand, you are only interested in trading from areas that have created a high momentum move in the past, not areas that the market struggled to move away from. So for that reason, here we have a clear demand right here. Now we have a clear demand right here. Now you can see that this is a very clear demand. Why? Because this demand led to this break of structure, number one. Number two, this demand had a very high momentum movement away from it. So for that reason, this is the sort of levels you look for. Now, even if you go down to maybe the 1 hour, the 30-minute or the 15-minute time frame to go look for levels, make sure the level prints this sort of momentum before you take it. Because without this sort of momentum, what exactly shows that what there has been a positive move away from this level before. So since you don't have any other reason, that could be one of the reasons why some of your levels are failing. Because when there's no this sort of rally move, there's really an evidence that there has been a trading opportunity right there. And apart from this rally move, so you need to make sure that what the levels you identify haven't been tapped before. Like basically, after the market moved away, there hasn't been any drop back to those levels. Like for example, let me look through this chart if I can see any level that the market tested multiple times. Now let me say you are on a much more lower time frame and you wanted to sell this market when it started a downwards movement. Now basically, maybe you identified a level, this area here as your supply level. Now you see a touch here, and a stiffer level. But the truth is, when it comes to trading supply and demand, you need to make sure that what the market only comes to your level once. Supply or demand levels are not traded multiple times. So once you see that the market has come into the level before, you don't have to look for a trading opportunity there again, unless you are going to a lower time frame to go look for a different setup from there. Like in my previous video, I showed an example of a trade I took on GBP AUD, whereby the market came into my 4-hour level. I wasn't there, but then what I did next was that after the market retraced back to the level again, after moving away from it, I went down to a lower time frame, like a 30-minute time frame, and did a different setup there and traded that particular setup and no longer traded the 4-hour on again. So with that, we know that what we have a clear level right here. You can see a clean move from it, which shows that there was a momentum away. Now after this, you have another tip. Now sorry that I'm looking to the side. I have to keep everything right here because I always write out my things. I have a notebook where I write my things. Now the next thing you need here when it comes to trading supply and demand, after identifying the market direction and identifying your level, is simply patience. Now patience is very important when it comes to trading, because without patience, a lot of people take a lot of dirty trade. Like you and I know that there are a lot of people out there that have a high profitable trading skill already, but then the lack of patience to actually wait for the market to come to their level has seen them record more losses than any other thing. So what do you do in this scenario? Now what you do is basically you have to, after you identify your level, you sit back and then wait for the market to come to your level. Yes, you have to just sit back, relax. Now you wait for the market to come to this level before you look for your trading opportunity. Because without giving the market this room to come here, there are so many of you that will be like, okay, the market is here, there's a demand here, and some of you will try selling this market down here by fire, by force. Now the truth is that doing this will actually hurt you a lot as a trader, because this market might fly upward from here or might crash down. You can't actually tell. So for that reason, I will always advise you that after you identify a level, patiently wait for the market to come to your level before you actually take your trades. Now, I've given you 3 rules already, which is number 1 is simply making sure that what you are following the overall market trend whilst trading. Number 2 is making sure that you actually patiently wait for the market to come to your level before you take a trade. Now, number 4 is simply when the market comes in, you don't have to rush the trade. Like when the market comes to your level, you don't have to rush and then just get in immediately. I see a lot of you are trading supply and demand. What is basically doing simply once the market taps your level like this, you just go in immediately. Now, I'm not condemning your trading strategy, but one thing I will tell you is that it's better you patiently wait for the market to give you a clear reason to get in before you go in. Now, what I mean by this is simply wait for your confirmation before you go in. Now, when it comes to me trading supply and demand, I don't just wait for market to come to my level and go in. Now, basically what I do is that I wait for the market to print into my level like this. Maybe here the market is right now, just wait for it to drop here and then tap into my level. Now, once it tap into my level, another thing I need to make sure is that what this market doesn't break out of the level. Once it break out of the level before reversing, I'm no longer interested. But if it comes in maybe up to this mid level here like this and then reverses from here, good, I might take it. However, I will still have to wait for my momentum before I go in. So basically, once the market come in here, the next thing I wait for is simply I wait for the market to give me a bullish close. Now I need the market to give me a strong bullish close that, okay, like I'm no longer going down again. I'm about reversing upward now because number 1, we had a very high momentum from here. So if this market should come back here again, we should be expecting same momentum. So why are you trying to break? So for that reason, you need to actually wait for a clear evidence before you go in. Now this evidence is simple. I wait for the market to tap the level. Now you need to wait for, I basically look out for 2 simple things to go in. Number 1 thing I wait for is simply a rejection. Now a rejection, maybe I need the market to actually give me a rejection. Now what I mean by a rejection is simply the market tap the level like this and they give me a long wick. Now the market give me a long wick and a tiny candle close at the top, which shows that the market is rejecting the level. In this sort of situation, I will actually go in. Now on the other hand, now for those of you who don't know this sort of long wick I'm saying, let me just draw it out for you to see. So maybe the market comes to the level like this and then I have to wait for. So let me look for something to actually draw a candle. Let me look through these geometric shapes. I'll actually get something to draw it. So typically, okay, let me use the arrow as an example. That's not what I need. Let me just come back here and then, okay. Maybe what I mean by rejection is simply the market tap in here and then quickly closes outside like this. Now this sort of close is simple. The market comes in like this, it taps it, and then it rejects off by giving a very tiny body and then a very tiny lower side and then a bullish close at the top. I don't know what I can actually use to draw this to make it easier for you all to understand. So let me use let me look for any of the shape tools here and then draw it out. Okay, so I have the arrow. Let me make use of the arrow. Something like this. Okay, we have this like this. Now for the candlestick body, let me look at the icons, if I can get any icon that I can use. Nope. So let me come back here and then use the rectangle. Now over here, you come over here and then something like this. Let me just change the settings first. Style extend to right. Let me just get it off. Good. Now something like this. Now let me cover it all with blue. Come over here, blue, and then make it really deep. Now good. We have a candle like this. You see a candle in this manner whereby the body is very small and then the upper side is big. Now once you get this sort of candle, you quickly go in immediately. This is a good sign that the market is going to enter. This is one of the best confirmation that you can use. And on the other hand, maybe the market came in deep a little bit. Now in a situation whereby the market comes in deep a little bit, maybe the market came in deep. Let me just make this smaller and then drag it in. Maybe the market came in deep a little bit like this. Now after this dip, then the market followed it with a candle like this. And then the market chooses to follow it with a candle like this. And then the market followed it up with a bigger candle like this. So you have your bearish candle here. Let me change the color of this one to gray. So let me say this gray one was a bearish candle which was very small. The market printed it in, and then after that the market gave you a bigger bullish close here also. This is another good entry. You can just enter at the close of this very candle. Now these are some of the best entries you can actually use when you are trading supply and demand in order to actually make sure that what you are trading it the right way, because a lot of you just wait when the market comes in. Some of you even use limit order. Personally, one thing I don't advise when it comes to trading supply and demand is using limit order. What if it was a fundamental event that pushed the market against the level with such momentum? I know some of you go on TikTok calling it, or on social media calling it sniper entry, this entry, smart entry, eagle eye entry, so many other names, and I will tell you that that is very risky. Like, we all know that what this level really looks good for the market to trade from, and at the same time the market can break this level as well. So why be in a hurry? Why don't you just set an alert here once the market comes? Like, for example, let me just keep this alert in here. Now you have this alert here. Once the market tap the level, you receive your notification on your phone or on your laptop. If you're on your laptop, then you look at the trade, then you basically sit back, give the market about 30 minutes to 1 hour to give you this sort of candle close pattern, and then you go in and then patiently wait for your outcome as well. Now this is basically the fourth thing you need to wait for in the market. Is basically, number one was you need to follow the market trend. Number two, you need to make sure you're identifying clear level. Number three, you need to patiently wait for the market to come. And then number four, you need to wait for your confirmation pattern as well. Now the final one here is simply the fifth method. Now the fifth method is simply you need to know exactly where to get at from the market. Now a lot of you take highly profitable trade, you hold this trade, you be in this trade, and then you be in profit, and then you keep holding this trade, and all of a sudden this market gets to a particular point and then reverses against you again, and you be like, how is this happening? Why is the market reversing? I thought this was a good demand level. Why don't you just buy to the moon? Now the truth is the market will never buy to the moon. Same way you identified this demand level to buy from, same way someone else have identified a supply level to sell from. So in order to make sure that what you close the profit you actually get, one thing I do is simply I just look out for a 1:3 risk to reward. So once my market gets to 1:3, those in my signal community already knows. Once it's 1:3, my hands are off, meaning we've hit TP. If you want to continue holding from 1:3, it's on you. If you want to close, it's also on you. So personally for me, once I get 1:3 risk to reward, I'm off. Whatever thing you still want to look for in the market is totally up to you. I can control you on that. Basically, once you get to 1:3, I will let you know that what the market has hit a 1:3, so the rest is basically on you to hold. So now from there is basically left for you to run. So now once the market come in here, gives me my confirmation, the next thing is simply my entry. So I'm going to go in here, put my entry right here. Now my take profit, first I will set my SL, which is more important. Now you see there is this wick here which might cause a little bit of obstruction, as we all can see. However, I don't really care about this wick. My level actually comes lower here, so basically I keep my SL just tight here. Now this wick is very long, and one thing is for sure is that provided that the market doesn't break this wick on its first attempt, it means it will never come to it. So I'm just going to keep my SL some pips away from the lower part of the level. Next up is basically my take profit. Now my take profit is just a 1:3. You can see right here we've gotten a 1:3, and guess what? This is a very decent level. And why is it a decent level? You can see here the market made a little bit of swing low movement, but then you can see that here is where the market made a break to the downside. You can see we had let me say a support here, and then the market broke the support to the downside. So typically your take profit shouldn't be more than this sort of level, because this market might get to this level and then sell off again. And in order to avoid this, you can just set your take profit like this. So market come in here, gives you your confirmation, you get in, it comes over here, you take your take profit. That is a solid 1:4. So guys, this is basically how you trade supply and demand. It's nothing complicated. Just follow these rules and you will be all right. So see you in my next video. Bye.